Kyle Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello, and welcome to the Security Token Show. I'm your host, Herwig, and I'm joined by my co-host, Kyle Sonlin.
Welcome back.
And we're excited to bring you an action-packed episode of Security Token Knowledge. But before we do want to thank our sponsor for making this show possible. I'm talking about Planet Wealth, the firm that's helping digitize businesses and giving them the tools to leverage blockchain governance. And they've got a huge announcement at the Digital Assets and Securities Conference hosted by Vertalo in Austin, Texas next week. So check out for that announcement. Keep your eye on this company. They're doing great things, and thank you for making this show possible.
Shout out to Planet Wealth. We'll see you in Austin. If you're in the area, come by, meet me and Herwig and some of the rest of the STM team. It's going to be an awesome event. But moving into the regular programming here, we start off our episode with the companies of the week. We move into a lot of great industry news, and then we finalize the episode with our main topic. This week, it is OpenSea and the scandal that happened this week between some executives. A juicy main topic. We're talking about that scandal and what it could mean for NFT regulation and what that means for the broader scope of security tokens.
But of course, we chose some companies from last week that made some huge moves. Kyle, who did you pick?
So my company of the week this week, look, if you've listened to the show before, if you've seen us, you see our background. We're here in sunny Miami, Florida. We love and embrace the Miami tech community. And this only furthers that narrative of Miami being the crypto capital of the world. I'm talking about Miami Coin, which is my company of the week this week. Now, in episode 103, 6 episodes ago, I covered CityCoin. They were my company of the week because they were creating a protocol and platform that allowed cities to raise capital from the community in order to generate public works funding. And now Miami Coin is Miami's initiative here. Miami is the first city that is actually taking advantage of this opportunity, and the city of Miami has accepted a over $5 million donation by the protocol of Miami Coin, which is issued on the Blockstacks platform. And they are taking that $5 million, they're going to be putting it towards climate change, they're putting it towards public works projects for underprivileged communities, and they're putting it towards education on technology, specifically around cryptocurrencies and blockchain. So Miami yet again proves that it is forward-thinking. Congratulations, this is a huge win for the Miami community, Mayor Francis Suarez, and everyone that played a part in this.
I love it, Kyle. I mean, absolutely a phenomenal choice. I mean, $5 million, that's no small chunk of change. And in fact, it's one of those first major kind of community projects leveraging the blockchain, supporting the government. In this case, Miami Coin was the perfect poster child. In fact, they're looking to roll it out in numerous other cities now based on demand. So congratulations to City Coins and to Miami for making it a huge win.
So you can buy that now or mine Miami Coin or whatever city you want to support. Definitely check that out. But with that, Herwig, what's your company of the week this week?
Well, I want to put the spotlight, Kyle, on a probably more smaller known company in the space. They're not necessarily one of the big exchanges or tokenization platforms, but they are infrastructure providers, and I think they are key to this space. And so do others, because they just recently announced $25 million in a Series A round. I'm talking to none other than Invenium. So Invenium, they provide technology to go ahead and verify blockchain level data. For a real estate transaction, you want to know if the data that they're providing to you about the asset is actually real and has integrity, and they go ahead and give you that promise. That's an important layer when we're talking about digital assets where you may not know or have direct access to this easy information. Invenium makes that easy, and they do a whole lot more, and now they've got a huge war chest to make that happen, so congratulations to them. It's going to be exciting stuff for the security token space as a result.
Yeah, I know Invenium has been very active in the real estate security token space. They even tried to do a deal with some properties here in Miami, and so it's great to see them continue to thrive.
And with that, Kyle, I think we can get into the top 5 things that you need to know in the space. And starting off with the top 5 things happening in the security token space right now, we're going to, of course, talk about none other than Exodus, which made a monster listing on T0 on September 14th, and since then has been making huge waves. Kyle, you're the CEO of Security Token Market. You're directly plugged into all this. What's the details on the token?
So Exodus listed their equity onto the T0 marketplace. They did a $75 million fundraising round through a Reg A+, which means that anyone, retail investors, could get involved and invest in this deal. It is officially listed on T0 as of Tuesday, September 14th. And this is big news because this is a fully retail offering. This is one of the first deals we've seen come to T0's marketplace since the last couple of years. And this is exciting because there is a ton of additional trading volume coming in through the T0 platform. Exodus had an initial big spike. It's now kind of evened out right around where it listed at, which means that it was priced pretty well. And it's great to see additional traffic and new assets coming to T0.
I'm sure there are only more and more user accounts being onboarded, sending their Exodus tokens there. So hopefully we'll see some increased trading activity as well here in the near future.
And that brings us right into the T0 gains. We've seen that Overstock, the parent company that owns a significant minority share in the T0 platform, has really been on the rise as it's focused on its e-commerce business. They have announced that they are looking to bring in a new CEO that's a Wall Street veteran that's going to be focused on onboarding new assets and really driving this platform home. They also have a partner, Pelion Venture Partners, that's acquired a majority controlling share that's also providing a lot of input and feedback on the direction of the company. And so we've seen a lot of success coming from T0 as the positive momentum continues to build for that platform.
And for number 3, we've got a very interesting argument between Coinbase and the SEC. Coinbase, one of the most well-known crypto companies, public no less, has gotten a Wells notice from the SEC regarding their Lend program. This is a program where you can go ahead and earn yield from one of their programs that they offer. And to the SEC, it looks a heck of a lot like a securities program and therefore needs to follow the right procedures. And they are not. And therefore, the SEC plans to sue Coinbase for this. And Brian Armstrong, the CEO, was not happy about this. He clawed back publicly, trying to basically accuse the SEC of not knowing what they were doing and not understanding their product. So this is very, very important. We're going to see where this ends up going because the SEC is obviously regulating Coinbase and has recently been asking for more authority across the cryptocurrency industry. So we'll see where this battle between Coinbase and the SEC goes.
It seems like Coinbase is offering a similar style and structure of product as BlockFi, which also attracted a lot of attention by the SEC. So if you want to learn a little bit more about that, we have a main topic on BlockFi's battles with the SEC that may give you some additional context.
Tell us about number 4, Kyle.
Jump Capital. Jump Capital is investing into crypto in a big way. They're launching their biggest fund ever, $350 million dedicated towards blockchain, cryptocurrency, and capital markets investments. Specifically, they're doing equity and they're doing tokens. So why not do a little bit of both in the form of a security token? Only time will tell, but this is another huge fund that's getting involved in the blockchain space in a big way.
Expecting to see some security token investments, no doubt, from Jump Capital. That's awesome stuff. And last but not least, number 5, we're going to talk to you none other about South Africa. South Africa is launching a central bank digital currency. They're jumping on the bandwagon, and they're working with the biggest, most knowledgeable player in the space, the Bank of International Settlements, which has been covering central bank digital currency for many years now. They have lots of great reports. And Project Dunbar, which is actually in cooperation with several other countries, is meant to focus on the benefits of cross-border transactions with a CBDC. And South Africa's central bank is excited to get on board. That's big, big news for the country, who has recently launched a couple of different STOs. And we had the chance to visit ourselves if you want to go check out those episodes in the past. But that's everything you need to know in the top 5 in the security token space.
Jessica, over to you.
I am Jessica Burns, back with this week's industry updates. Starting off, we got China planning on leveraging blockchain technology to digitalize the securities industry. Representatives from the country's largest stock exchange and regulatory bodies met recently to discuss the future of the securities industry, and they concurred on blockchain playing a central role. This was organized by China's Securities Association and brought together security regulators, including China's Security Regulatory Commission. The deputy director of the CSRC called on market participants to double down their blockchain initiatives, citing benefits such as the building of a trust mechanism that could be the foundation upon which the future of China's securities and future industries is built on. In addition to calling on security industries to collaborate with the blockchain ventures. Back in the US, we've got 5 asset classes, each the size of the current 2.27 trillion cryptocurrency markets that are making their way towards Wall Street institutional investors with venture and private equity investments into third-party firms, facilitating these investments growing by factors of magnitude quarter to quarter, say market participants. According to Rosenblatt Securities, a New York-based institutional brokerage firm, $9.5 billion was invested into Wall Street infrastructure, enabling institutional handling of digital assets in the first half of 2021. Should this trend continue and traditional investment patterns hold, 2021 will see $370 billion go into industrial-grade, institutional, investor-focused tokenized infrastructure, the tokenizer estimates. We have entered a new cycle in crypto. Institutional adoption is the key and is happening at a pretty impressive rate, says Victor Shaw, managing director at Rosenblatt Securities. Next, we've got DBS Digital Exchange announcing that it will grow its security tokens offering available. The platform plans to tap on the growing popularity of cryptocurrencies and digital assets among corporate investors, accredited individuals, and family offices. DBS plans to list at least half a dozen security tokens by the end of 2022 on DDEX, the bank's international-focused digital asset exchange, the exchange chairman said on Monday. According to the head of capital markets at DBS, the bank's position as one of the biggest wealth managers in Asia and its expertise in originating deals in capital markets would help it attract users and grow trading volume. The bank listed its first security token on the platform in May 2021 in the form of a S15 million digital bond. That is simply fantastic progress. Keep it up, DBS. We also saw BitCheck's global CEO saying the exchange company is exploring safe havens in light of regulatory tightening. Steven Stongberg said that BitCheck is testing out lending and stocking products, as well as dipping its toes into security token offerings, such as real estate, stocks, and cars. BitCheck's test launched a limited number of what Stoneberg's termed illicit ETFs, like Google tokenized and Tesla tokenized, which they are currently only selling on a small subset of clients via their Bermuda license. As the market matures and investors eventually look for yield in alternative projects outside of utility tokens, BitCheck is positioning itself to capture that market share. Stonberg views real estate on the blockchain as one of the use cases that will reshape the industry. In fact, BitCheck is exploring the potential of STO-based tokens in real estate and possibly art. And the US-based trading platform Oasis Pro Markets announced a strategic partnership with Anchorage Digital for digital assets on the alternative trading system. The partnership unites a unique mix of US-regulated multi-asset trading platform and the trading digital securities for digital cash as an alternative to traditional exchanges, with the one-chain custody and settlement from the first nationally chartered digital asset bank. The Oats Pro platform provides a primary and secondary marketplace for trading digital asset securities, including a growing product suite that already includes equity, fixed income, and asset-backed securities. Oats Pro will first launch on the Ethereum blockchain and will support other blockchain protocols after. Heading over to the STO market drops, we had Peter Gaffney's weekly article, Tokenize This, where he talks about tokenizing ESG projects. This article is about how security tokens are positioned to play a unique role in ESG practices and can be used for data management and tracking, which is critical to successful ESG implementation. We also saw STM's token rookie host, Adrian Alvarez, write an op about how OpenSea's insider trading scandal by employees may lead to regulation of NFT space. Amazing articles for the team. Make sure that you go check those out. And finally, the STM team is getting ready to head to Austin, Texas for the Digital Assets and Security Conference on September 21st to 23rd. If you're attending, make sure you come by and say hello. That's all I got for you for this week. Now let's go over to John for the latest STO and market updates.
Welcome back, tokenizers. I'm John Pittman. You're a token boy, and I'm here with your weekly security token offering update. Up first, we have Kudo's partners tokenizing a crypto-themed show called HODL, which stands for Hold On for Dear Life. When HODL airs in 2022, Kudo will showcase his very own mining app in the episodes. Viewers will be able to download the Kudo Miner app and earn tokens with its additional computing power. The token issued by the series will be called the FDL token. As I'm sure you can guess, it's an acronym meaning for dear life. The tokens represent a prorated share of the series' net earnings and can also be used to purchase digital souvenirs from the series in the form of NFTs. The parent company, Kudo Ventures, has spent the last 4 years developing and scaling a global distribution of computing power. On a mission to build the world's largest distributed cloud computing platform with the use of existing and unused hardware, Kudo Ventures have already successfully created a sustainable for-profit model in which anyone or company can profit from the network. Kudos is basically trying to become the Airbnb of computing power. Up next, we have an STO brought to you as a result of a collaborative effort between a fintech capital advisory firm called Dealbox and the June 19th Museum Incorporated. Dealbox was enlisted by the June 19th Museum for services related to the museum's initial seed round and planned security token offering. The seed offering will be available under Regulation D, Rule 506C for $3 million. Following the seed round close, a Series A investment of up to $10 million is planned in Juneteenth Museum security tokens that will be made slowly to accredited investors, which will also be under Rule 506C. The purpose of the seed round of funding is to acquire the 1861 Customs House historic site in Galveston, Texas, and transform that house into the museum. This new center will feature a boutique hotel, a restaurant, and educational activities, all that support the national celebration of Juneteenth. The museum plans to use virtual and augmented reality to celebrate global diversity and inclusion through the stories and historical significance of Juneteenth. The holiday Juneteenth originated in the year 1865 when the Emancipation Proclamation ended slavery in Galveston 2 years after the release of the document, giving birth to the holiday. The security token will represent an investment in a social movement aimed at eliminating slavery in all its forms throughout the world. Juneteenth tokens are expected to be available for trade within the next 12 months through digital security marketplaces. That wraps up your weekly STO update. Now, if you have any STOs coming out that you would love for me to cover, then please reach out to me on Twitter at TokenBoyAdvisor. Here's Keith with your market update. See you on the other side of the blockchain.
Hello, everyone. Time for another weekly secondary market trading segment. As always, all news and pricing data is sourced from stomarket.com. Today, the total security token market cap is sitting at just around $1.13 billion. It's been a very exciting week in the markets, with Exodus officially releasing its security token Exit for secondary market trading on the T0 marketplace. In its opening day of trading, the token rallied up to $48, and it has since retraced to about $28, which indicates a solid drop of 42% from its all-time high. The Exodus token actually rose to third in the market cap rankings, passing Blockchain Capital's BCAP and T0 security token during this all-time high. It has now subsided to the number 5 spot in the rankings. With Exodus currently holding a market capitalization of just over $75 million, the token is the main culprit for the recent gains in the total market capitalization of the security token space this week. T0 security token is showing some consistency in its trading volume. Sitting at just over 1 million again this week, the token is trading at $5.50, up from $5.31 last week. It's likely that investors are regaining confidence as the exchange's new CEO, Alan Konevsky, takes the reign. INX is trading at $3.01 this week, down about 2.5%, continuing the trend of the decreased volatility for the newly released token after a hectic open just a few weeks back. Volume rose slightly this week for INX. It's at 3 million from 2.8 million the week prior. The Mount Pelerin security token is on the move this week, experiencing some downward price action, though, down about 13%, with weekly trading volumes reaching as high as 114,000. Now, for tokenized stocks, Alibaba tokenized shares on FTX traded with a weekly volume of $1.5 million. This indicates a monstrous rise in volume as the token hits its 4th week of trading on the cryptocurrency exchange. We've seen another decline of trading for the Grayscale Bitcoin Trust shares. Trading volume this week is actually sitting down at 6 million from 8 million the week before, a drop of another 25% this week. BioNTech this week experienced a huge drop-off in volume on FTX as well, coming down from 1.5 million in weekly volume last week to just under 700,000 this week, dropping a total of 53%. And that'll wrap it up for today's secondary market trading segment. Another exciting week in the markets. As always, do your own research and hit me up on Twitter at KeithDLT to send me all your hot takes. We'll see you next week.
And moving into our main topic for Security Token Show episode 109, we're covering the OpenSea NFT scandal. This is pretty juicy, Herwig. So let me break down essentially what happened here. So OpenSea, if you haven't heard of it before, has been referred to as the eBay for NFTs. We've talked about NFTs a lot. I think that everyone maybe knows this is digital art or collectibles. And OpenSea is essentially the platform where an investor could place bids and buy and sell different of collectibles and different pieces of art. And so a group of Twitter detectives, this was a couple thousand people sometime this week, were able to track the public ledger of the blockchain, which is one of those great benefits that everyone preaches, and were able to track that the head of product from OpenSea was essentially insider trading with proprietary data on the OpenSea platform. This is pretty big news.
Absolutely. I mean, it means a lot of potential issues, and we're going to dive into that. But first of all, let's just recognize that this is one of those great and brilliant use cases of the blockchain, right? We were able to have the public community recognize and identify that the largest trading place of NFTs, the eBay of NFTs, had some insider trading going on. People who were using knowledge about NFTs that would be hitting the homepage, specifically I think his name was Nate Chastain here, who actually, recognized that there could be a lot of value in these NFTs and used secret accounts to scoop them up and then find resale value. And eventually they traced that all back to one central account that he owned. So that's how they were able to investigate and identify it was this individual, so much so that they actually got him to publicly admit it, that he was the one at fault. In fact, he ended up resigning from the company at the request of OpenSea. And OpenSea did a couple of other things. They did find a third party to go ahead and investigate what exactly went down, as well as, of course, banning, and this is kind of shocking that maybe they didn't do this before, but banning similar activity for employees to go ahead and trade off of information they found, internally.
And I think that there was some great coverage by many individuals, including Adrian Alvarez from Token Rookie, who is an attorney himself, who was talking and discussing on the STM blog about how does this constitute a break of securities laws? And is there any issues here around insider trading of assets and pawning them off to other individuals using this insider information? He specifically cited Jason Calacanis, who's a notable investor in early stage companies that also felt the same way. This is really becoming a very fascinating development in this platform. Now, as you said, right, they forced him to resign. They're kind of exploring how they can prevent this in the future. They certainly, from a policy perspective, have banned this from happening in the future. But you have to wonder, especially with how the SEC has been watchdogging all of these different crypto platforms and DeFi platforms looking for these types of slip-ups, if they're not going to be pretty frustrated with something like this happening.
If you want to invite regulation, this is exactly how it happens. And whether it's the FTC, because they're treating these like, let's call it digital baseball cards, and there's potentially fraud there, or it's with the SEC because actually it was Jason Calacanis that Adrian referenced here, pointed out that who else maybe within the company was also doing this, and how early and quickly did the CEO know and do something about this. If there was a linkage to the CEO, this could potentially lead to profits and issues because OpenSea has raised capital, and now there are potentially issues that link this all to a securities problem, and therefore this would actually be securities fraud, and that could of course have serious ramifications. It may even lead to potential actual precedent from the courts or potential new regulation being introduced by any of these regulators. So this is actually a pretty big deal, even though OpenSea is probably trying to sweep this under the rug and try to move on from this as quickly as possible.
And we're not here to spread any kind of hate towards the industry. We are super supportive of crypto, of NFTs, and of blockchain technology. And quite frankly, as you mentioned earlier, Herwig, I think that this is one of the best examples of why the blockchain is something that we need to prevent fraud, right? Fraud and all kinds of scams and things like this just happen in traditional markets. We can't pretend like these types of things do not happen in the public sector. We see settlements from banks and other financial service providers around money laundering and all this kind of crazy stuff every year. And so with a public blockchain, we're able to audit this information. We're able to see where these assets are going in a way that this is transparency that would never be afforded in the public markets with traditional shares and with traditional setups. And so I think that I really hope that one of the takeaways that regulators have around this industry is not as much the opportunity for fraud, right? Because this is a new industry. There aren't a lot of guidelines. There's not a lot of regulatory clarity from these regulators in terms of establishing what you can and can't do. But at least this auditing trail, this paper trail is available, and anyone can be able to retroactively go back and explore these things. And I think that's super powerful and revolutionary as a concept, and something I don't want to get lost in the news here.
No, it's absolutely true. But remember, our main topic here is how can this affect potential regulation? And that's why this is so interesting to me. I think potentially this is, for an industry that's burgeoning and starting to get a lot of attention, reaching that multiple billions mark, if they want to avoid the ICO fate and potentially the DeFi industry that is now also getting investigated by the SEC, well, the NFT industry needs to figure out best practices that OpenSea needs to avoid, and other companies in the space need to put in practices ahead of time to avoid situations like this, because again, this is exactly what invites regulators to go ahead and sniff around and see what's going on and figure out how do they protect potential people from, getting scammed in this situation. Many people who could have had earnings that in fact this individual now went ahead and claimed. And what happens to him? He obviously resigned, but does he keep all his winnings? Is there potential civil lawsuits, or again potential investigations that get brought into this? We'll certainly keep you tuned in the show about what happens as a result of this.
Absolutely. I think this is part of a greater conversation the SEC has been heavily focused on around market manipulation as well, right? Having celebrities that essentially pump and dump different assets in order to encourage a swell of investors to raise these prices that then these insiders are able to manipulate and then sell and make profits on behalf of other individuals. And this is kind of a part of that larger issue at play here, that there likely does need to be some level of control here from these regulators in terms of establishing this stuff, but we just haven't seen precedent in this space yet. So it will be fascinating, even as we turn our attention towards security tokens. There really isn't much guidelines around how market making works for these underlying assets. And really, at the end of the day, this is kind of what it is, right? Establishing a market, creating buyers and sellers. And, there's really no precedent on how this could evolve in private markets. And it's fascinating to see it develop, potentially, unfortunately, from someone taking advantage of the system instead of developing, a more proper solution.
And certainly as it evolves, a couple of episodes, we did talk about how NFTs could start to break into that line of looking like a security with royalties, with fractionalization. So again, this industry needs to pay attention and make sure that they don't invite the scrutiny of the likes of potential of the SEC and others. And so with that, Kyle, I don't know if you've got any other thoughts, but I think this is just hopefully another great episode that you learned something from. We always love questions, feedback. You can reach out to us directly on LinkedIn, on Twitter, and you can follow all of our content. You can check out Adrian's Token Rookie article, as well as many other great articles on the Security Token Market blog, as well as on stomarket.com. You can find trading information, all the latest news, as well as everything you need to know regarding security tokens.
So drop a like on the video, leave a comment wherever you're watching, whether you're watching this clip on YouTube, you're seeing a clip on LinkedIn, wherever you are watching and viewing and participating, engage with the community. We're having awesome conversations, and that's how we can build, develop, and grow. Thank you so much for everyone that's listening, and we'll talk to you next week.
Happy tokenizing.